This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
We're going to go through now and look at the working capital management. And first of all, we're going to go through and focus upon inventory before we then go through and focus upon receivables and then finish things off in the final videos by looking at your payables management. When we look at the inventory management, the key thing to go through and consider is that the focus of our F1 syllabus is looking at the manufacturing industry, whereby a business will go through purchase raw materials, subject the raw materials to a process, and then that process then develops the finished goods, which are then sold on to our final customer, aren't they? So the focus here is on manufacturing. We're not concerned with the service industry. And what we're going to go through and think about first of all with regards to our inventory management is looking at the costs of inventory management, because it's important to understand that any business needs to ensure that it holds a particular level of inventory that meets the customer's demand. Now, when we're going through there and trying to identify the best or the optimum level of inventory within our business, we need to go through there and consider the costs that are associated with it. Because as we build up more inventory, we could build up more costs. And we want to make sure that we're balancing up the level of inventory with the level of cost that we are incurring. So what we've got within the notes here is that there are 4 considerations to go through and look at when we're trying to look at the cost of our inventory management. The first one that we've got there is our ordering costs, sometimes referred to there is it as C suffix O. The cost of ordering a batch of goods. It's independent of the size of the order. We'll go through there and look at discounts in terms of bulk discounts later on, but the key bit to go through and consider now is that the order cost is exactly the same regardless of the size of the order. Things to go through and consider there within your ordering costs are administrative costs and delivery costs. Clearly, the further away the goods are from your warehouse, the more expensive it will be to go through there and order those goods and get them delivered to your premises. And as well, the more orders that we put in per annum, then that increases the administrative cost, doesn't it? If we just put in one large bulk order at the start of the year, that wouldn't take up too much administrative time. But if we had to make an inventory purchase every day of the working week for the entire year, then that's going to go through there and increase those order costs, isn't it? So they're just parts to go through and consider of the overall ordering costs. In our computations which follow, we will just go through there and be given a cost per unit of the order. Okay. In terms of them, we have our holding costs, because when we have bought our inventory, we then need to maintain it and keep it within the warehouse, don't we? So that's referred to there as C suffix H. Okay. And what you've got there, again, there's half a dozen things to go through there and consider. First one there is the cost of the investment in stock. So essentially thinking about your opportunity costs. The fact that as you're holding more and more goods, you're not able to sell those goods, so therefore you are losing out on that sale and therefore incurring a cost to the business, aren't we? The more inventory that we hold, the more expensive that then becomes, doesn't it? The others, I think, go through there and make pretty much logical sense. You've got there the cost of storage, so the more goods that we buy, the holding cost will go through there and increase, won't it, as we need more warehouse space. The more goods that we buy, the cost increases due to your insurance, doesn't it? Because you need to insure those goods against what you have in terms of damage, or what it mentions there at the bottom with regards to theft. And again, be aware in terms of the type of goods that are being stored, because we can go through there as well and consider your deterioration of the goods. So if you have perishable goods, maybe they are food items, that the longer that you hold those goods for, the more likely it is that they are going to go off, and therefore you can no longer sell them. So that's a cost to consider within the factors. And also as well, you've got obsolescence. So if you have goods that are very much subject to change with regards to fashions and trends, so it could be clothes, it could be technology. If you buy too many goods in this year, what was fashionable this year may no longer be fashionable next year, might it? So the holding cost needs to consider the risk, if you like, of obsolescence. What we've also got to go through and consider, and we don't really think about it in terms of our analogy in a moment, but our stock shortage costs, i.e. what happens if we go through there and begin to run out of stock. Because if we run out of stock, we can no longer go through there and supply our customers. So we get a bit of a risk there, don't we, of the fact that we're going to lose our customers, as well as the obvious risk, I suppose, there that if you have no stock, you lose your sales and therefore lose your contribution. Likewise as well, if you've got a stock shortage, then you need to go through there and try and replenish those goods as quick as possible. So you might have to have, if you like, an emergency order. So that purchase cost for the new supply could be a lot more expensive than what it would be normally. And it may be potentially that you need to stop production elsewhere to produce the goods that you require to sell to your customer. And again, that goes through there and increases the costs of your inventory. But as I said, we don't really consider the cost of stock shortages when we look at the analysis within a moment. It's just something to consider in case there is a non-computational, a qualitative aspect within any exam question. And then what you've got there, if we're considering the cost of goods, the cost of inventory, I think it goes without saying that we need to go through there and consider the purchase cost, don't we? How much does it cost to buy a unit of goods? We will discuss bulk discounts a little bit later on, okay? But what we've got to go through and think about there is how does the change in the purchase level, so the quantity that we buy each time we make an order, how does that go through there and impact the overall cost of inventory? Because if you go through and buy more inventory, so buy lots of inventory, you've got a lot more holding costs, haven't you? But if you're buying lots of inventory, then you have a much lower reordering cost, don't you? Or a lower ordering cost. Because if you're buying lots of inventory in one go, you don't have as many order costs to incur on a regular basis. So by buying more, you're increasing one cost but reducing the other. Similarly, if you go through there and think about buying less goods on every order, you're going to increase the ordering costs because you will need to buy more every time you go through and make an order. But if you're buying less goods, then your holding costs, your storage costs are reducing, aren't they? So what we need to go through and consider essentially is we need to go through there and try and calculate what's the optimum number of goods that we should buy on every single order. And to go through and do that, we need to go through and consider the total cost. So when we're thinking about your total cost, we're going to go through there and think about your purchase cost. We're going to consider your holding costs, and what we're also going to go through and consider as well is looking at your ordering costs. And what we're going to try and do is we're going to try and calculate an optimum quantity to order that will go through there and ensure that we have minimized our overall costs. And what we have there is referred to as your economic order quantity, or your EOQ for short. And you can see there that the definition at the top is what we've spoken about. The economic order quantity is the order quantity that minimizes the total annual costs. Okay, so your annual holding cost, your ordering cost, and also as well your purchase cost as well. Okay. But we'll bring in the purchase cost a little bit later on, okay? Because your purchase cost, if you have an annual cost of goods, if you have an annual quantity that you're going to order, then the purchase cost will be the same, won't it, if we ignore any bulk discount. So for now, we can leave the purchasing cost to one side and focus upon the annual ordering costs and the annual holding costs. The annual ordering costs that you have there is the number of orders per annum multiplied by the cost per order. So what you've got there is you look at your cost per order. The number of orders is going to go through there and take your annual demand, is that the D, divided by the quantity that you buy on every order, isn't it? Okay, so To work out the number of orders, you take your annual demand, dividing it by the quantity of goods that you buy per order, isn't it? So if your annual demand was 100,000 and every time you ordered 10,000 goods, then 100 divided by 10 is 10. You would need to make 10 orders per annum, wouldn't we? Okay, nice and simple. The annual holding cost is your average stock levels multiplied by your annual holding cost per unit. So we go through there and look at our holding cost per unit. We need to look at the average quantity of stock. So we take the quantity, which is there as Q per order, and we divide that by 2 to work it out as a very simple arithmetic average. Okay, just dividing it there by the 2. And what you can go through and see there is that if we start looking at our holding cost, so is it CH, and our ordering cost, is it there CO, you can see as we go through and increase the order size, so as we go through there and increase, is it the quantity that we purchase on every single order, you can see there that your holding costs steadily increase, but your ordering costs reduce, don't they, as we have less orders to make per annum if on every single order we buy more goods, don't we? Now what we can go through and do there is we can add those two costs together, the holding cost and the order cost, and that will go through there and give you your total cost, okay, your total annual cost, ignoring, if you like, any purchase cost and also as well any bulk discounts. And what we get there is, hopefully you can go through and see, is that we get to a minimum cost, and that minimum cost is the economic order quantity. Okay, what we need to be able to go through and do there is we need to be able to calculate that economic order quantity that minimizes the cost of holding the goods and the ordering costs. And what you have there is a formula. Now it's great because there's no need to derive the formula. There is no need to go through there and remember it because it is given to you within the exam. Okay, you just need to apply it. Okay, so that economic order quantity takes the square root of 2 multiplied by the order cost times by the annual demand divided by the holding cost. And the key bit there is that the holding cost is for 1 unit and there is it for 1 year. Okay, so if you like, it's the square root of 2 cod over chips. Okay, I think that was something that was taught to me many years ago by one of my tutors. The square root of 2 cod over chips. Okay, because in the UK we do tend to like cod and chips. Okay, so what we've got is we need to go through there and apply that formula. So we can go through there and use the example that we have there. The example wants us to go through there and calculate the economic order quantity, so using the formula that's given above. And it also wants us to work out the total annual cost of the inventory. Okay, so what we've got there is, if we're going to go through and work out the economic order quantity, we need to work out the order cost, the demand, and the holding cost. So it says that the annual demand for an item of inventory is 32,000 units. So that is D, isn't it? Your annual demand. The item costs $40 per unit to purchase. So that will form part of our total annual cost of inventory. And what you've got there is that you've got your order costs at $15. So is that CO? And your holding costs, note the annual holding costs per unit, RCH. Okay. So once you've got that, we're away. We can go through there and plug in the numbers, can't we? So to work out your economic order quantity, your EOQ, you take the square root of 2 cod over chips. So the order cost is 15. The demand D is 32,000. The holding costs is $1.20, isn't it? If you tap that into your calculator, you should get there. Is it 894 units? Okay. You're rounding it to a whole number. Don't round it up, okay, or always go through there and round it down in terms of your number of units, or follow what it says specifically within the question. Okay, so that's your economic order quantity. What we need to go through and do now is it also wanted us to work out your total cost, didn't it, at your economic order quantity. So is that at your 894 units? Okay, and what we're going to go through and do there is we're going to work it out. Doesn't say within the question, but it will be there to the nearest dollar. Okay, so what you've got there is you need to consider your ordering cost. So remember, that's your order cost multiplied by, is it the annual demand divided by the quantity. Okay, then we need to go through there and look at your holding cost, which takes your holding costs and multiplies by the quantity over 2, doesn't it? So remember, we know what the economic order quantity is, Q, don't we? Because Q is the 894 units, isn't it? And then what we also need to go through and consider is the purchase cost. So looking at how many number of units we purchased during the year multiplied by a purchase price per unit, isn't it? So if we look at the ordering cost, I think the ordering cost was it $15. The demand, I think, was it as 32,000, and the economic order quantity was 894, wasn't it? If you tap that in on your calculator, I think you get, is it $537? Okay. The holding cost is that there as $1.20. The quantity we have is the 894, and then we divide that by the 2 to keep it as a simple average. So is that there? I think it's 536. Okay, let's just go through, tap it on your calculator and check. 32,000 divided by 894 times by 15 is there 536.91. So yeah, 537. And then for the holding cost, 1.2 times 894 divided by 2 is 536. Okay, excellent. So we've got those right there. Excellent. In terms of my purchase cost, let's just double check. What was the purchase cost? The purchase cost was $40 per unit. So you've got $40 there per unit. There were 800 and is it 94 units purchased. So if you like, if we do it properly, okay, you've got there, is it 32,000 units of which we purchased. So 40 times by the 32,000 gives me there is that 1,280 million. Okay. If we go through and add those together, your total cost that you have is there as $1,281,073. Okay. Excellent. There we go. Exam questions are likely to go through there, aren't they? And ask you to go through and calculate the economic order quantity. It could ask you to go through there and work out the total cost as well. Okay. Or it could ask you to work out the holding cost, the order cost, or just the purchase cost. You really need to go through and read the question, is it there, very, very, very carefully. Okay. What you could also go through and do, I don't think it was mentioned within the question, but just something to add on in terms of additional value, is you could, if you like, work out the number of orders that we place each year based upon the economic order quantity. So the annual demand is 32,000, isn't it? If we divide that by the 894, which is how many units you purchase every time, that gives you, is it 35, I think, 0.8 orders per year. So effectively, you'd round that up, wouldn't you? If you had 35 orders, you wouldn't get the 32,000 in terms of your goods. So you would have to go through there and round that up to 36 orders per year. So 36 orders per year. If you want, you can then go through and work that out in terms of how many orders you need to make every other week, or should I say, how often do you need to purchase your inventory. So given that there are 52 weeks in a year, if you make 36 orders in the year, 52 divided by 36, that's 1.44 weeks. So you need to make your orders every 1.4 weeks in order to go through there and satisfy the annual demand. Okay. Again, that's just another potential exam style question that you could be confronted with. The key bit in that what we've gone through and looked at with regards to your calculations so far and the economic order quantity is that we have not gone through and considered any bulk discounts, because with regards to your bulk discount, what's going to go through and happen is that the more that you purchase, the more the cost will reduce, won't it? Yeah, if you buy more goods, then you might get a discount on the purchase price. So in our example, the item cost $40 per unit, wasn't it? If we go through there and buy more goods on every order, it might cost us $39, $38. So what we need to go through and do and consider is, within the next video, we're going to go through them and use this economic order quantity and see whether or not, having ignored any bulk purchase discounts, whether or not, if we consider any bulk purchase discounts, whether or not that actually makes the total annual cost that little bit cheaper. And therefore, instead of buying goods based upon the economic order quantity, we should buy it based upon the bulk discount that we receive. But we'll see that in the next video.